Hey guys, it's Matt. So in this video, I wanted to talk about the concept of being greedy when everyone else is fearful and vice versa. So doing the opposite of being fearful once everyone else is greedy. And I want to go over why this is an important mindset to have if you're a long-term investor, especially after what happened recently in the crypto market where a lot of cryptocurrencies crashed within a couple of hours. And so as a reminder, if at any point in time you guys enjoy this video, make sure to drop a like and subscribe to this channel, as well as be sure to join my trading community. There are links in the description of this video. So if we go on to CoinGecko for a second and do a quick overview of what has happened over the past week, we can see that Bitcoin in the past 7 days is down 11%. And if we continue down this list, we can pretty much see that the vast majority of altcoins were down at least 10 to 15% and still have yet to show any sign of a recovery. Stuff like this is expected to happen in the crypto market since the crypto market is still incredibly new, relatively speaking, compared to the stock market or any other market. And so we have to understand that this type of volatility happens. If we look back at the previous cycle, for Bitcoin in this case, we can see that there are multiple instances where we have these 30 or 40 or even 50% corrections. Now, obviously, history is not going to repeat itself to the same extent, so that's a given. Otherwise, if it was super easy where we just copy everything that happened in the last cycle and do it exactly as we did last time for this cycle, well, then everyone would be a multi-billionaire. But for every loser, there's going to be a winner. That's just a part of trading. So what's more important is that we take this idea that the crypto market is volatile, even though we have a ton of adoption. So institutions are pumping billions of dollars into Bitcoin. We have different countries that are adopting Bitcoin as a legal tender. Obviously, the market as a whole will slowly grow and become less volatile over time, but we still can't say that this type of volatility is not going to occur because it just occurred the other day. But anyways, why is it important to be greedy when everyone else is fearful? Well, the reason why this is important is that this presents us with some long-term opportunities to invest into assets when they are relatively undervalued or trading at a cheaper price as opposed to buying them when they're more expensive at a premium price. But there's a trade-off here, right? So if we look at Bitcoin over the past couple of weeks, we can obviously look at this. Let's call it the month of October all the way up to November. This was a bullish trend. And then since late November to now, we have been trading in a bearish trend. And one thing that you will notice, and you can look back on social media, what you will find is that as Bitcoin was pushing higher and higher, and then once we formed a new all-time high, so right over here, this is when the euphoria in the market was at its highest. And this is typically when a lot of people were tempted to purchase Bitcoin and to jump into Bitcoin. And that's the crowd effect, where a lot of people will only jump in once everyone else is talking about it. So they want a proven trend that is shown to us that it's incredibly obvious. So at this point, this would have been very obvious. And then obviously we had a period where the market sold off. And so now everyone is being fearful. But this doesn't make any sense to me from a long-term perspective, because if you're a long-term investor and you did your research and you plan to buy Bitcoin and you plan on holding it the next couple of years, well, then wouldn't you want to buy it at a cheaper price versus buying it back when it was near the all-time highs? And so this is the type of logic that we need to have when we're approaching the crypto market as a whole. And so a strategy that you can use, and I will stick to Bitcoin, but you can probably apply this to any other altcoin that you have done your research on and you believe in it in the long term. So that's a key component. Before you do this, a strategy that you can use is dollar cost averaging, or at least some form of it. So for those that are stressed out about trying to time the exact bottom for Bitcoin and trying to overanalyze how low it's going to go, the reason why this might not work for a lot of you is because, one, it's incredibly difficult to call an exact top or bottom. And even if you get it right once or twice, you're not going to get it right every single time. But the other issue is that, let's say that you bought Bitcoin. This doesn't have to be a spot trade. This can be you purchasing the actual token. But let's say that you bought Bitcoin at 52 or 53,000 and you put your entire investment portfolio into this one position, what are the chances that you're going to accept the fact that you're currently in a drawdown and you're not going to sell out of fear, especially if you're a new trader? The chances are very low. And that's because you're only focused on the single price over here. So if Bitcoin is trading above 53,000, you're happy. The second it trades below 53,000, you start panicking, you're freaking out. You can't stop looking at your phone. You can't stop looking at the charts. And in many cases, a lot of people sell out of fear. But with dollar cost averaging, the strategy is where you set aside a certain amount of money that you would invest either each week or each month, regardless of what the price of Bitcoin is at. And so if you don't want to do this exact variation, then at the very least, what you can do is you could divide up your position into portions of where every demand region or at every support level, every couple $1,000s or so, you would invest a portion of your money. And then if Bitcoin dips down a bit, you would invest even more. And at this point, at the very least, you're not so worried and caught up about a single price. And how far you would spread this out, again, it depends on your risk tolerance and how much you would be willing to invest in Bitcoin if these scenarios were to play out. And so one thing that you can do is if, let's say, Bitcoin retraces a bit and then it drops down to 40,000 and then retraces again, drops down to 30,000. And I'm not implying this will happen, but you need to paint this type of scenario in your mind. You should have a few different scenarios of what can potentially occur. And then you should ask yourself different if and then statements. So similar to a computer programmer would. You would ask yourself, if Bitcoin drops down to 40,000, then what? What do I do? Do I not invest anything? Do I invest a little bit more? Do I invest 5% of the money that I've allocated towards crypto? Do I invest $100? Do I invest $500? If Bitcoin drops down to 30,000, what do I do then? Right? And these are the type of questions that you would ask yourself if the price continues to drop or even if the price rallies. So a mistake that a lot of people probably did is over the past couple of weeks when Bitcoin is trading above 60,000 or above 65,000, I can guarantee most people were not taking profits at all. They weren't even taking off 5% or less. And so then if the market is experiencing any sort of period like we're experiencing right now, where everyone is being fearful, during times like these, you would take advantage of it and invest because now you're purchasing at a cheaper price. And so this is where dollar cost averaging or a variation of it is pretty good if you're patient and you wait for the next couple of months or the next few years. And then let's say the price of Bitcoin is trading 5 or 10 times greater than what we're currently trading at. Well, then now you would have a much greater return versus buying it when it was around 60,000 or 100,000, etc. Think of this as a strategy from a risk to reward scenario where you're simply taking advantage of assets that you believe are undervalued and then look to sell some profits when you believe that they are overvalued, because this is typically when the majority of people will be looking to buy. So thanks for watching, guys. Make sure to drop a like on this video if you found it helpful, and let me know if you'd like more videos like these. And again, as a quick reminder, there's a link in the description to the Discord app as well as the Telegram app, so make sure to join if you guys haven't joined yet. Thanks for watching. I will see you in the next video.